It's 5 o'clock in London, it's midday in New York, it's midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream. That's Series 34, episode number 1. In the aggregate, 199 starts here. Let me open by discussing the fact that a message from our sponsors, investor appetite for Asia is rising, but post-trade, well, it's all very, very exciting, ladies and gentlemen. Friction is holding markets back. In the new NASDAQ Value Exchange study, 25% of participants plan to grow exposure, yet 46% face artificial trading limits. The biggest pain point, corporate actions. 60% report high error rates, and 39% of platforms are still legacy. The fix is clear. Harmonize rules, standardize workflows, modernize technology in order to unlock efficiencies in settlement and corporate actions. For exchange leaders ready to scale, download Creating Asia's post-trade operating model of tomorrow at, and here's a bit of an URL for you, bit.ly APAC/post-trade. That's APAC dash, all one word, post-trade. Our guest today, ladies and gentlemen, is Troy Kane, the topic making markets in play. As the former president of MIAX Futures, Troy Kane certainly knows his way around an exchange business or two. He's now the president and CEO of InPlay Global, an innovative financial platform turning team performance into an investable asset. Making that investable asset class, it's going to be on the world's first regulated marketplace for trading equity securities based on sports performance. And it's a joy to welcome to the studio today for this show, Making Markets in Play, Troy Kane. Troy, welcome to IPO-VID. Where in the world are you today?
Thanks for having me today. I'm in Chicago.
Chicago, and we're recording this show at the moment, so there is always a slight risk that you may actually have suffered exposure or frozen to death, God forbid, by the time we get this show out live next week, because the cold winds of winter are certainly hitting the Windy City.
It definitely has. We are in single digits, soon to be negative temperatures Fahrenheit here in Chicago.
Wow. Well, as I'm in Poland today, I can readily report that the weather isn't looking too much better, Troy, from my perspective. So tell me, were you originally born in Chicago?
Yeah, born and raised Chicagoan.
Excellent altogether. And so how did you therefore find your way into financial markets?
Great question, one I really enjoy answering too. So I actually tell people I was born into it because it's through family connections. So I come from a multi-generational family of traders. So my mom and her sisters all were on the trading floors at the Chicago Board of Trade. And she brought me down when I was 14 to start clerking for some of her clients in the corn and soybean futures pits.
How fantastic. And corn and soybeans in those days, I mean, this was presumably sometime before we had the wondrous 24-hour markets. So the hours were reasonably restricted, if my memory serves me correctly.
That's right. The opening was at 9:30 a.m. and they closed at 1:15. It was the best hours of operations.
Absolutely incredible when you think about it. Yes, barely a 4-hour workday, and everybody was on the golf course if they wanted to be by like 2 o'clock, 2:15 in the afternoon. Quite incredible to think that that was how markets operated until so recently. So you got blooded, as it were, on 141 West Jackson, that magnificent Chicago Board of Trade floor, and saw everything going on there. What then drove you into your career in financial markets from, clerking during summer holidays or whatever for your mom and family?
So as you mentioned, the markets were on the trading floor. They only traded, a few hours a day. And what I saw as I was, getting ready to go to college is that electronic trading was starting to be experimented with. First in financial derivatives like the bond market. So in the late 90s, the Chicago Board of Trade would actually open up the pits for a few hours in the evenings to allow the Japanese bond markets and the US bond markets to trade in parallel. And they started to pilot out electronic trading as an alternative so they didn't have to staff or have a trading floor at night. And so I saw that electronic trading was the future of the industry and would often raise my hand to work on projects that would align with anything that was innovative around electronic trading, and started to work on what was called Project Day at the time at the exchange, and then was offered an opportunity to go to Germany and work with Eurex, who was pioneering a lot of the electronic trading for futures at that time in 2000. And that's where I started to learn and study about trading system development and design. And then I just got hooked. I knew that, electronic trading was going to take over and that we would go 24 hours, 24/5 and soon to be 24/7 in the industry. And this was 25 years ago. So, and I've been, not looking back since, and have kind of taken my career in the direction of always trying to innovate and modernize capital markets.
So interesting. That must have been an incredible baptism of fire, because when Project A came along at CBOT, it was so politically difficult because obviously the floor traders were incandescent. And then all of a sudden, this Deutsche Terminbörse, they ate the lunch of the Life Exchange in London. They became Eurex by merging the Swiss Exchange. And you find yourself then, 2000 AD, as you say, working with this CBOT Eurex platform proposal, which never really went anywhere in the end. But certainly at that stage seemed to be as if it was going to be an incredible future of financial markets.
Yeah, so they called it the ACE project at that time. It was for alliance, between the Board of Trade and Eurex. And, they developed the first robust trading system for CBOT, and then they went to Life and partnered with them for a few years before being acquired by the CME and becoming CME Group, and then moving on to the Globex platform. So, in 7 years, I was able to work and develop in 3 different platform architectures between Eurex, Life, and CME Globex. And so it was great education and opportunity to learn from different exchange operators, how they looked at innovating and developing algorithms and risk protections, and the ability to enable traders to go from a point and click style of trading into a more automated algorithmic, and then eventually that morphed into high frequency and low latency.
Yes. Fascinating times altogether during the course of what was a decade of remarkable acceleration. And to think that just before the decade had started, good grief, the CME was electing compromise candidates as chairman because nobody could agree on anything. And people thought that the Europeans, like the DTB Eurex, were going to eat their lunch and end up being the most dominant exchanges in the world. And look how things ultimately played out. Quite fascinating. So you held senior roles through CBOT, CME Group, and so on. You've also worked at Citadel Securities. That must have been an interesting perspective on markets.
Yeah, Citadel Securities was definitely an opportunity of a lifetime. I spent 6 years there leading the global derivatives and FIC business development function. So that allowed me to work with not just exchanges like CME, but I got to work with all of the leading exchanges in derivatives, fixed income, and FX. So I got exposure to NASDAQ, NYSE, CBOE, and exchanges in Europe and Asia. And started to learn about global market structure, different technology architectures, and then started to advocate for enhancements and improvements around those architectures to enable Citadel to increase its liquidity and provide more access to those markets.
Yeah, very, very interesting times altogether. So now, moving forward, then you played quite a key role in the development in the futures and options market of Miami International Exchanges. How did you come to work there?
So when I was at Citadel Securities, I had a really strong relationship with MIAX as part of my role there. And MIAX was looking to restructure their futures business, which was the legacy Minneapolis Grain Exchange. And so I came on board a few years ago to do that, and as the new CEO of MIAX Futures, and transformed MGEX, the Minneapolis Grain Exchange, into what's now MIAX Futures. And that involved launching a new matching engine trading platform because they were using CME technology and they wanted to move on to their own MIAX technology. So we launched MIAX Onyx last year, which was a great accomplishment to be able to do that. And then we're looking to launch new products. MIAX is going to be launching the Bloomberg Index Futures products later this year.
Yes, very interesting times altogether, taking the Minneapolis Grain Exchange all electronic and away from, well, that incredible building. I've got to say, no disrespect to 141 West Jackson, but the Minneapolis Grain Exchange I've always thought was perhaps the architectural wonder of the bourse business. Quite a beautiful business, but not quite so suited to the 21st century.
Yes.
So, here you are now. You've made this exciting move to InPlay Global. My bad, actually, at the introduction. I think I got your title wrong. I do believe you're president and COO. Sorry about saying that at the start of the show. Tell us a little bit, how did you get involved, come up with the idea for InPlay Global, and explain to us what it all means?
Yeah, so appreciate it. InPlay Global, I got introduced through the founder, Edwin Johnson, who I've known for over 15 years through my time at CME. He was a large bond trader at CME and got to know him, through the network and through his relationship with the exchange, and saw that he was developing this concept of securitizing sports performance. And after seeing how prediction markets had grown around sports, I saw that this concept around sports performance on the SEC side was very innovative and something that no one was really looking at. And so when I started to dig into it more with Edwin and the founder, I really saw something special and knew that this was something that would really transform the space and bring a new asset class into financial markets. And so InPlay Global will be the first SEC regulated or supervised exchange for sports performance securities. And that's a new class of products that InPlay has developed. And how that is done is similar to how ETFs are tracking performance of baskets of securities or baskets of assets. We're going to be creating individual team companies that are tracking performance of those teams. So in the case of the NFL, we're going to create 32 individual team companies. So in the case of Chicago Bears, we would have InPlay Chicago Bears Performance Inc. And their business model or their economic or revenue model will be for every win that Chicago Bears achieves throughout their season, they will be earning $5 per share from InPlay Performance, which is one of our subsidiaries. And so we will take those companies public through a Reg A Tier 2 offering, which allows us to raise up to $75 million per issuance per company. We'll make those shares available through an initial offering process, just like any other publicly available company. And then they will be made available to all investors, both accredited and non-accredited. So retail will be able to have access to these initial offerings. And the initial offering price will be set based on the expected wins of that team at the beginning of the season. And so if the Chicago Bears were expected to win 8 games, we would start the offering price at $40 because at $5 per win times 8, it would be $40. Now, throughout the season, those shares will trade on our ATS, InPlay Markets, 24/7. So we'll be trading in the evenings because that's when a lot of games will be played, and on the weekends. And so we'll also be the first equities ATS to be trading on the weekends. And so that will be something new that will be brought to the marketplace. Now we see prediction markets being traded on the weekends, but we don't currently see any equity markets being traded on the weekends.
And very interesting. Very, very interesting. And therefore, effectively, your market hours for trading are not going to be the conventional Monday through Friday hours. You're just going to be trading at or around game time. Did I understand that?
No, we'll be trading 24/7, but we see the preponderance of our volume being done during games or around the games. And that's actually how we came up with the name InPlay, is that we see a lot of the trading being done play by play during the games. And so we want to leave the securities available for trading during non-game play, because sometimes news will come out similar to how stock news comes out. The same fundamentals will play here. So, injury reports, any type of staffing changes that might happen at the teams, any competitive reports that come out from the analysts, after the week's play is finished. So we want investors to be able to trade in and out of their positions when that news is made available real time.
I see. So explain a little bit to us about the mechanics of this game win or lose situation. So are we looking at a platform where all the teams raise so much money and then effectively it's a kind of zero sum, or am I missing something in the definition just of the wins and losses for the time being?
Yeah. So actually, let me actually take a step back and explain a little bit more about the revenue models for the team companies, because it's actually not a zero sum, which we've kind of created a more additive valuation model. So there's two ways that these team companies will earn revenue. There's what we're calling on-field revenue and off-field revenue. So the on-field revenue will be the $5 per share per win for an NFL team company. We also have off-field team revenue. And how that's going to be built up is we are working with leading advertising agencies to commit marketing dollars that want to market directly to consumers that are interested in sports. And so because we are launching sports performance securities, that is directly the demographic that a lot of advertisers want to have access to. And so we're going to be able to commit marketing dollars into a revenue allocation model where each week how those teams are engaging with those investors will divide out a portion of that marketing dollars to that team. So even if a team loses their match, they will get some revenue attribution based on how the investors are engaging with that team that week. And so it ends up not being a zero-sum game because the stock will never go to zero.
Interesting. And therefore, presumably, when you do have an epic game that everybody ends up talking about for days after at the water cooler, that's going to be something that's driving more of the advertising revenue and therefore allows the losing team to actually do remarkably well, even though they've actually lost the game per se.
Correct. Like, the fans will engage with their team even when they may not be winning all the time, because there's a lot of fan hope and just, love for the game, love for their teams. And so, they may be trading in and out of those games because they see that they're going to win, or, it's a close game. We've seen a lot of close games in the NFL this last season. It's been great. Even in the playoffs, we've seen a lot of close games. And so, that fan engagement we see as a great element to see how investors are trading in and out of those securities each week. And we want to reward those team companies for that engagement. And this is the way we have built that.
Fabulous. So therefore, there's a marketing dollar side, and then there's the direct game side. And obviously, I suppose my concern is it possible for a company to actually run out of money because it loses so many games before the season ends?
So the companies are not paying each other based on the wins. The companies are actually paying InPlay Services, who's managing these team companies. And then InPlay is paying the team companies based on their performance at the end of the season. And so it's just a way that the funds are being moved around. And so there's no way for the team companies to have their funds exhausted down where they wouldn't be able to pay out what they're accruing at the end of the year, because that's actually coming from InPlay Performance, who has a contractual obligation to pay those team companies based on their performance on the field and off the field.
Okay. Now, help me here a little bit, because I really am, for example, in American football, a bit of an ignoramus. Is it possible that InPlay Global has to then make up a shortfall because some team loses so many games? Or is it essentially a question of, because there are only a fixed number of games, all of the money raised means that there is always going to be a sufficient amount of money to pay out to cover all the winners?
That's correct. And then we also have the marketing revenue that's coming in as well. We're actually putting more money in. So we'll never have less coming in than will be going out.
Which, as you said, is vitally important because it's more than a zero-sum game. It's not just a question of wins versus losses. And obviously, therefore, the more hype that actually goes through a season, arguably the better it can be for everybody, even the people who are on the losing side of the equation, because it's going to be more popular, which is the kind of things that we've been seeing in other sports, like the ones I understand, like Formula One racing in recent years, with greater audience participation as it's been going along. I get it. Very interesting. So tell me a little bit about your rollout and actually where you are at the moment in terms of your regulatory position, first of all.
Yeah. Great question. So because we are going to be listing these as Reg A securities, we have to file what's called an offering circular that gets qualified by the SEC. And then to launch our ATS, which will be where the secondary trading occurs, where the shares will be traded, we have to become a broker-dealer under FINRA and then file an application for our ATS. So all of that is currently pending with the regulators. So we'll be regulated by FINRA, and then we will have SEC qualify our offering circulars for securitizing these team companies. And so that process is in flight right now. We're expecting those approvals in late Q1, early Q2 of this year. We've also partnered with the member exchange, MEMX, to build the technology for our ATS. They have a great track record of doing this for other ATSs and exchanges, as well as their own exchange. And they're actively building that technology, and we are targeting to have that available for testing in early to mid Q2. And then right now we're targeting a launch in early Q3 right now.
Excellent. So that's going to be very exciting. So therefore, what's the order of priority at the moment if you get going in Q3? What are going to be the first sports and the first entities you're going to be listing? Will it be American football?
We were hoping to do the World Cup, but it's looking like the NFL will be the first professional sport that we're going to securitize, and the NBA will be following that because that season starts just after the NFL. And then we'll be looking at some of the other professional sports like the NHL. We also have Major League Baseball playoffs. One thing that I didn't mention yet is that for these securities, there'll actually be two issuance for each of the sports. There'll be one for regular season, and then there'll be one for the playoffs. And the reason why we're doing two separate issuances is that not all teams make the playoffs, and the economic model slightly changes for the playoffs, where instead of getting a payout by game, you're actually the payouts are going by round. Now, some rounds are only a single game, but not all sports playoffs are designed that way. And then each round, the payout goes up. And so it escalates. So first round could be $5. The second round would be $10 as the teams get knocked out.
Of course, I totally understand that. And therefore, presumably then when you get to some of the more sophisticated playoffs at the upper levels where they have a payoff, which is actually a multi-game series, presumably there's some form of tiering or equivalence between all of the different games in those series.
That's right.
Cool. That's very, very interesting. So tell me one thing, I'm just interested. Has there been much discussion so far with the sports industry itself in terms of how InPlay Global can manage to interact with the teams?
So currently, the way that we've designed these securities, we do not require any approvals or licensings from the leagues or from the individual teams themselves. We're using a legal precedent called the Fair Use Doctrine that allows us to use any information in the public forum to create these financial products. With that said, we have engaged with some of the teams and some of the leagues just to get their feedback about the design of the product and what they think. And so far, it's been well received. But we haven't negotiated or partnered with anyone yet.
Very interesting. And in terms of the model itself, I mean, don't get me wrong, you've got a huge path just from what you've mentioned so far between possibly soccer, but certainly even the American sports like American football, baseball, hockey, and so on. Have you found that there are any sports that don't necessarily work with your model?
Well, the model works better with sports that have high scoring results and are a lot of play-by-play action. Now, that doesn't mean that the concept won't be applied to other sports like soccer or lower scoring team sports, or ones that don't have a lot of play-by-play action. You just may not see a lot of turnover of trading intra-game. Where we see that the model really being, the most successful is like on basketball, football, anything that has a high velocity, high turnover of scoring. Fascinating
altogether. Well, I'm minded with you talking about high velocity, high scoring, and all of these sorts of topics to give you a rest for just a couple of seconds because that's been a pretty ultra low latency discussion so far in the show. Thank you very much. I'm here with Troy Kane. He's the president and COO of a fascinating new venture, InPlay Global, and we're talking about the way they're changing the world of markets. But let's go to our weekly video. Give Troy a couple of seconds where he can presumably, in true sporting fashion, be sponged down in his ring or on the bench as appropriately and get himself an orange juice or whatever it is that you get these days in the middle of sports games. And let's talk about, well, our video of the week. Here we are, ladies and gentlemen. Let's look at an interesting snippet from Big World. Meanwhile, in Big World, desperation at hand in the European Union as it tries to regulate its way to growth, which has never worked anywhere. Even the EC's house newspaper, the Financial Times, aka the Brussels Bugle, is growing frustrated. A recent article recorded two pithy views, amongst others. Lord Hill, the former EU Commissioner. Britain is no longer the EU's financial centre, and it doesn't have another one, which has made the task of integrating capital markets harder. For more in Big World, like or follow. That interesting topic, of course, comes after Donald Trump went all the way to Davos, and instead of coming back with a lousy T-shirt, he came back with Greenland, apparently. How you managed to get that into Air Force One is anybody's question, but clearly it's much more of a shape-shifting aircraft than we'd previously realised. Speaking of shape-shifting aircraft, slightly different tone to this week's Book of the Week. I was uninspired by the latest financial tomes, but I was remembering a fabulous tale because we were discussing an Exchange Invest weekend, some fascinating stories of travel, flight, and so on. Don't forget, you can subscribe to Exchange Invest Weekend absolutely free. That's sort of macro reading we send out on the weekends. You can sign up at exchangeinvest.com. Although at the same time, when you're there, do please give yourself a 7-day trial subscription and try Exchange Invest itself, the water cooler of the bourse business, the exchange of information, and indeed the product that effectively helps subsidize, along with our good friends at NASDAQ this week, the production of these videos. Anyway, Alexander Frater, once upon a time an English public schoolboy, used to spend part of his year traveling halfway across the world beyond the blue horizon on flying boats, an absolutely fabulous increment of travel in the early days of the aviation business. And he went back many, many years later and stayed in all of the different places where it was commonplace for the passengers to stay during the course of what was at that point in time at least a 7-day journey when you started from London and made it all the way to Sydney in Australia. It's a great read, ladies and gentlemen, something slightly different and possibly the ideal antidote if you're sitting in an incredibly frigid Poland, Chicago, or somewhere else, musing on the number of flights that are unfortunately being cancelled due to bad weather. That's our Book of the Week, and I want to return to the fascinating discussion that we're having at the moment with the president and COO of this intriguing new InPlay Markets venture. So I'm here with Troy Kane. He used to formerly run the futures and options business for the MIAX, the Miami International Exchanges. We've been looking at the variations on a theme of a first regulated enterprise that's going to have its own ATS for trading sports. Troy, fascinated to hear from you. What has been the initial response from the trading community in every possible which way, shape, or form to your venture?
Very well. I mean, we've gotten a lot of positive feedback. Very few firms and trading organizations that we've engaged with have found any kind of deficiency or holes in the concept or the design of the product. They're very excited to see this product come to market. We're starting to engage with market makers and brokers right now about our go-to-market strategy, and they're excited to offer these securities to their clients. We've seen the growth and success of prediction markets around sports, and I think that adding the performance securities layer to the ecosystem will actually add more opportunity to the space through arbitrage and through additional products.
Yes, it's quite intriguing, and certainly that was one of the things that was most noticeable about the early days of the sports prediction markets in Europe when I was somewhat involved, good grief, all the way back 25 plus years ago, was the sheer number of products that you can manage to have around those, which obviously you're going to provide a fascinating underpinning by being the kind of underlying win-lose, but also seasonal or playoff-related speculative entity for people going through the course of the year with that added advertising kicker.
Yeah, I mean, we also, just to highlight, we actually see this being also a risk management product. So, actually, when the founder started to develop the concept for the performance securities, he went at it looking at it from a risk management perspective because he didn't see that sports had any kind of risk management product out there for them to utilize. And so when you're looking at a performance security that's tracking the performance of a team throughout the whole season, you can utilize that security to offset any risk that you may have on your business relying on how that team performs throughout the season. So an example could be a garage owner next to a stadium who is reliant on that team doing well and getting those parking spots sold every game to be able to make revenue and to make a profit. Well, if the team doesn't do well in the back half of the season and fans stop showing up, he's not filling those parking spots. And so he can trade the securities potentially to offset some of that risk or lost revenue that he's not able to achieve.
That's a very good point, and actually also dates back to the earliest days of prediction markets, where we saw that in the UK and Ireland, where a lot of people were able to use those early sports prediction markets as a very, very strong risk transfer, of course. But one advantage, I mean, it's a different thing. It's obviously chalk and cheese in many ways. But one advantage they had was certainly the ability to trade without having to worry about stock borrowing and so on. I mean, how is that going to work within the maxim of InPlay in order to manage to facilitate the ability to people to sell when they're trying to hedge as much as buying?
So we will have the ability to short our securities. And because these are going to be Reg A securities, they will only be listed on our ATS. So you won't have to deal with fragmentation or hard to borrow security type issues. And you'll be able to come to InPlay to work with us and our clearing partner, which is something we're still working on to be able to facilitate those shorts.
Very interesting, and certainly that'll be great. Of course, lined up with, as you mentioned earlier on, Memex, your technology partners, which gives you a very, very strong backbone footprint, given how well they're doing at the moment in terms of both stock platforms and options trading platforms elsewhere. And I suppose that leads to the next question is, do you think that, given the fact your own pedigree has been in the futures and options business originally, there's going to be an opportunity for InPlay to therefore eventually move into derivatives around about these securities?
Absolutely. That's you're thinking the same way that we are. So, like we mentioned earlier in the conversation, we see a lot of product development around these performance securities, not just on the equity side. So we do have plans to launch options on our securities and then launch weekly options on those securities. That's something that can't be done on prediction markets that would be permissible on ours. We also see potential ETF creation around our securities. Things like conference ETFs or division ETFs, especially when we get to semi-professional sports like college football and college basketball. We could see, like the Big Ten ETF or the SEC ETF. So we do see a lot of interesting product creation. And then we also have started to have some conversations with index providers about indexing these securities once we have enough data.
That's got to be very, very powerful and very interesting. And also, of course, ultimately is going to create an intriguing secondary security style market where you're going to be, I don't mean secondary in any sense, just separate, let's say, separate but equal. That's a good phrase to have in this week when we had Martin Luther King Day. A separate but equal type of security, which will also back up where in some franchises, perhaps not so much the USA, but there are already publicly listed firms. The actual clubs themselves can often be listed, as takes place in, say, soccer in various parts of the world.
Yeah, I mean, we want to find a great way to work side by side with those type of offerings, and we do see a lot of international opportunity there, especially in Europe and in Asia. We've also been exploring Brazil right now with their football leagues down there. So, I mean, U.S. is just where we're going to be starting the first year, but we do see a lot of global opportunity for InPlay.
And that actually does lead me to a question, which is, I'm not asking you to tell us what is the secret sauce of where you're going to go when, but it's got to be very difficult. And I can remember this from being a co-founder of one of the very first prediction markets in trade. How do you actually sit down and start working on a matrix of which sport is going to be first and how you're going to get there?
So we've done some market research. That's a great question, by the way, around where currently traders or individuals are, trading sports today, or where they're engaging in the sports books and what sports they're trading on those sports books. And so that's given us kind of a good roadmap of where to go next, based on where there's interest and demand to trade those sports.
Excellent. I wish you every success for that, because that's going to be it's a wonderful but challenging environment to be in when you've got 3 or 4 mega sports like you've got just in the US Major League ball sports, for want of a better term. I suppose ball and puck, one really ought to say, to be precise, let alone when you get that into the rest of the world. And of course, then mega events like the World Cup and things like that. And indeed, that sport that I think is not so well discussed in the United States of America, cricket, which clearly occupies and vexes several billion people across the subcontinent every year with amazing gusto. How do you view, therefore, over the course of the next year, 18 months, clearly your priority right now is getting regulated, getting to market, making sure the systems work and so on. That's why you've chosen strong partners such as Memex. What do you think are going to be the challenges to trying to get liquidity going forward across the platform in the next year, 2 years, once you've actually found your feet and started trading?
The biggest challenge, which we're starting to deal with right now, is just education and visibility. This is a new product class that we have to make sure that investors understand the mechanics of. We're starting an educational campaign and outreach with universities, and trying to also use InPlay performance securities as a platform for enhanced financial literacy. Since our securities will be valued very similar to any other company that trades on a stock market, we can use the same fundamentals to teach all investing strategies, not just how to trade sports. Our securities are going to be priced and valued based on projected future wins, just like a company is valued on projected future earnings, how they're performing in their sector, how they're performing against their competitors, what their market share is in their product classes. It's all the same fundamentals that get applied to how you're going to price our performance securities. And so if we can teach those fundamentals through sports, then it empowers investors to trade all securities. And that's a really great opportunity for us to do.
Fascinating. At the same time, help me understand one part of the mix here, because obviously most stocks are expected to be perpetual, even if we know actually these days the average age that I think a stock survives in the S&P 500 is only about 15 years, 17 years, something like that. But obviously with your sports performance securities, am I right in understanding that effectively you go into an IPO ahead of the season, you buy for want of a better geolocalized example, the 2026 Chicago Bears. Then what happens at the end of the season before the playoffs? Is the company liquidated and it returns the money to shareholders, or how does that process work?
Yeah, great question, and I'm glad you brought that up. So that's exactly how it will work. So at the end of the season or the end of the playoffs, we will wind down the team companies, and we will pay a liquidating dividend based on that accrued value of their on and off-field performance.
Very good. And therefore, the next question, I suppose, is then let's say that the Chicago Bears, do feel free, if you're watching this, to say that I clearly know nothing about American football, because probably what I will say next is terrible. If I say, for example, if the Chicago Bears get into the playoffs, and I can hear thousands of people going, well, we always get into the playoffs, and I know nothing. If the Chicago Bears get into the playoffs, and I've owned the season security, then you've told me before I have to go to another IPO. There will be a playoff security. That's totally logical, because obviously most of the league doesn't reach the playoffs. But if I already held the seasonal security, do I get a priority to manage to get into that playoff security? The reason I'm asking that is because you mentioned something about the 75 million prospectus limit because of the way you're going through Reg A. Perhaps I've misunderstood.
So no, it's a great question, and that's why this is where we need to be very diligent in our education campaign on how these securities work. So when we wind down the team companies for the regular season, the team companies that get created for the playoffs are actually entirely new companies. It's not the same company being respun up for the playoffs. It's actually going to be a completely different company. And actually, the companies are going to be more generic because they're going to be based on seed placements. Because we're not going to know which teams are actually going to be in what positions for the playoffs. And we have to do pre-filings with the regulators. So we're going to have to create the companies with generic placements. And then once those teams get their rankings for the playoffs, then we can do DBAs on those companies and then get their symbols listed on the ATS.
DBA? Sorry, you beat me there, actually.
Doing business as, sorry. Yeah, it's just
I see. Right. So therefore, okay, so you basically put together the prospectus, but it's a blank prospectus in that you can understand what it is there in the business of being a sports franchise within this league, blah, blah, blah. But then once you get the number, because it's pulled out of the hat by somebody in Las Vegas or whatever, wherever they do these things, they pull out that crystal ball and say number 11, and then some breathly intones on ESPN that means the Chicago Bears or whatever it is, if I've understood correctly.
Yeah, they'll rank like the Chicago Bears got the second seed in the playoffs this year, and so we didn't know that. We wouldn't have known that at the time that we would have filed our offering circular.
Of course,
we would have said, okay, their NFC seed 2 team is now the Chicago Bears, or InPlay Chicago Bears Playoff Inc., whatever we call that company.
Okay, so I'm sorry, I'm just trying to be completely careful. Actually, you explained beautifully previously, and I did understand that about the fact the seasonal company dies and the playoff company begins. So when it goes to the IPO, do you have this series of IPOs ready to go, and as soon as they're seeded, then the IPO happens, or are people buying the stock blind on which may or may not be seeded? No,
we'll have the IPO once the seeded teams have been announced, and so we'll be able to run the initial offering at that time before the first playoff game kicks off or starts.
Okay, that's very transparent. And so therefore, just to help me understand, I mean, is there going to be a limitation to how much money can go into these particular companies? Because I know you mentioned about there are prospectus limits, $75 million, etc. Does that mean that if you have more than $75 million chasing the Chicago Bears, you have to go into some sort of an allocation mode, or how does that work?
So you're right. Under Reg A securities, these will be tier 2, which allows us to raise up to $75 million per team company per issuance. So we'll have $75 million, for the Chicago Bears team company for the regular season, and then when we do a new issuance for the playoffs, it's a new $75 million. Now we can do multiple issuance if we need to, that if there's high demand. But the one thing that we want to make sure that we don't do is we don't want out of balance shares outstanding for different teams. We want every team company to have the same number of shares outstanding. And so we need to set the threshold based on whatever that the lowest demand team is, and then set the rest of the teams at that threshold. And so even if there is higher demand for one team, we may not be able to offer that because we have to set the shares at a certain level.
I can understand that's both a frustrating issue, but at the same time, it's a very well thought through one, because clearly otherwise your whole settlement and pricing dynamics start to come apart very quickly if you've got a huge skew towards one particular team or another. Okay, you've been thinking this through assiduously, I can see, from start to finish, and I'm just trying to understand because it's a fascinating concept all round. So therefore, when we get through the playoffs, presumably it's the same thing, except that what I suppose as each team loses in the playoff, therefore their company is closed down and whatever's there gets redistributed. And then finally, whoever's actually there, when they have that huge mega game, the Super Bowl or whatever it's called, and they get through all those TV advertisements, then they're crowned, and then they're the last people standing in those two. They see their companies close, and presumably you hope then that everybody's able to go off to March Madness or something else, and you create companies on that. So it's a year-round franchise effectively for you. Come hail, rain or shine, there's always going to be a league ultimately you've got available for listing and trading.
That's right. Yes, exactly. It's going to be a very machine-like cycle, pumping out these team companies and getting them securitized and listed for trading. And then each season it will become more repetitive, and then we'll start to add other products like options and, work with ETF providers and indexers to add more to the ecosystem each year.
That is a supertastically exciting proposition. I'm very, very interested to see how it goes. We'll be excited to, we'll obviously be covering your developments in Exchange Invest as we go along. We've been looking with interest when you picked Memex as your tech provider. That was certainly a sign of just how serious you were. So tell me, Troy, perhaps we are, perhaps we're not moving away from the world of in-play sports securities markets. Where do you think the capital market revolution goes next?
That's a great question. One I've been giving a lot of thought to. I think that 2026 is going to be a great year for innovation in capital markets. I think we've already seen the interest of 24/7 trading in equities. We've seen the interest and investment in more of tokenization of equities, trying to solve and smooth out the clearing process and settlement process in equities. So I do see that this is going to be the year of transformation, specifically under the SEC and the equities markets. And then we're going to see crypto continue to be refined under the CFTC. So I'm excited to see how this year progresses.
Yes, not just in geopolitics. It looks like it's going to be an epic year, come what may, for what's going on with so many things happening across the technological gamut of markets from start to finish. Troy Kane, it's really been a joy to have you come along today. Thank you very, very much for explaining about in-play markets. You're the president and COO. I very much hope that we'll get a chance to have a chat with you when you've got at least a few games under your belt, perhaps the first season or something like that, and you can come back and tell us how things are going and what's been developing. It seems to be a very, very well thought through concept. I'm excited for your prospects as somebody who was a pioneer in the prediction markets a gazillion years ago. And I wish you every, very success with what happens. And ladies and gentlemen, that is our show for today, recorded from Chicago and Poland. So therefore a pretty chilly number all round. Had we been actually trying to play a game, we'd have probably been frozen off today. Next week, we're going to be joined by Lee Freeman Shore. That's going to be a fascinating discussion about stock market maestros. And I am looking forward to that very, very much. I just want to say a huge thanks to AJ, to Marianne and Racy, who've been our production team today. And in the meantime, I hope we'll see you at the water cooler of the Bourse Business Exchange Invest Monday through Fridays. And indeed, Exchange Invest Weekend, our macro read on Saturdays. You can sign up to either of those at exchangeinvest.com. And of course, as always, it falls to me just to wish you all a great week in life and markets. My name is Patrick L. Young. See you in the next IPO vid.